What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a Mullen, raw price action technicals, and statistical threat of analysis. Before we get started, please subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord, ARCab. Okay, you guys, let's go ahead and dive right into the charts. We have a lot to talk about. Okay, you guys, so yes, we were on our ascent based on our play, and then we got a massive sell-off, you guys. So this sell-off is actually not company it is not company specific. Okay, this type of downturn is actually influenced by broader markets in fear, you guys. Okay, so let's look at this chart right over here, you guys. So this is the SPY movement, this is BTC and Bitcoin, and this is Mullen. The reason why I'm bringing up BTC is because, as we all know, they're going the FTX, the broker platform, is actually going through a liquidity crisis in which they are now asking Binance, CZ is the founder, and they're asking him to bail them out. Now that created a mass per se a bank run is when everybody goes to their broker and starts liquidating their positions in fear of a sell-off in the market. So this caused BTC to fall about $5,000, $4,000, right around there, you guys. So this is a massive capitulation event that's happening. So as you can see here, I want to be able to show you this. BTC got that bad news and immediately started capitulating. On the trek up for the SPY, it literally felt the pressure right over here. You can see that BTC started first, then the SPY, then Mullen, right? Because Mullen is going to be the last stage of effect, right? So it's going to be affected after all the indices and the larger coins like Ethereum and BTC. So we have first the fall of BTC. The fall of the SPY fell in. BTC recovered with a heroic bounce, but it only ended up being a type of dead cat bounce in which the SPY also found some support of that, you guys. So please take a look here that we have a recovery from BTC here. We have a recovery from the SPY, and it's moving like this, you guys. This recovery versus this recovery, and then Mullen coming up, and then we're faced with this capitulation event, you guys. So you can see that everything in the markets, you guys, everything. I can even bring up the NDX, Nasdaq. I can bring up all kinds of indices, you guys, and you'll see that we're all facing a massive sell-off. So what's happening as well is that the pressure in the markets from for example, what's happening with Tesla. So let's go ahead and just bring that up into a new price scale, you guys, and see what we have. So now Tesla, this is Tesla in the bright yellow right here, you guys. Look at what's happening. This was Elon's drop of the selling of, I forgot how many thousands of Tesla, or how many, I forget. It was a lot of money, you guys. But you can see that even this is pressuring the markets down. Look at this. We have a sell-off right here. We have a sell-off right here. We have a sell-off right here. So these are, I'm not sure if this was exactly the moment where he sold off, but you guys, take a look at everything in the market is bleeding. So our play is going to be affected by that too. What I'm most impressed of, what I'm most impressed by is that our play is still maintaining this 2 fib. Like this was what I told you guys was my final entry. So we found support right at that 2 fib, which is right here at 26.54. And we bounced, and now we're in this candle right here. The bad thing is, guys, is that we're now below the support line of the channel. So that doesn't mean that there can't be any recovery, because I mean BTC right now, you guys, it is incredibly oversold, and there is a potential for a bounce coming up. I mean it's currently sitting at about let's see, I don't even know where the pain is. Yeah, I think we're at about $15,000 right now, BTC, you guys. So we have to really watch out what's happening here. So yeah, you guys. So we're still you guys know that I still have my stops set at a lower level. My stop is actually set at 24.10. Please, guys, I'm not a financial advisor. Take whatever I do show and I say within these videos as a form of entertainment. Do your own DD and we'll be okay. All right, you guys. So yes, I still am not stopped out, and we do have to pay attention to the fact that we are creating a series of higher lows and higher highs. So this is actually a good sign, you guys. Price action is attempting to do the move that we were looking for, and I did mention that this play was going to be such a choppy trek to the upside, guys. It's going to be tough. It's going to be very tough. So let's go ahead and move on to the next chart and see what we have, you guys. So this is going to be our overall bias and direction, you guys. So let's go ahead and maximize some of those windows right over there so that we can see multiple time frames for the RSI. So this can give us an indication, you guys, for tomorrow's price action. Please remember that CPI data is going to do some work for us. Also, the midterm elections. Trump is going to be making his formal presidency, his formal announcement for presidency on the 15th, you guys. So that's also a very important date, and that's actually something that we mentioned yesterday regarding the date span. So we're looking at about 14 days from the firing of the statistical signal that we're looking at from the volatility versus momentum profile, you guys. And we noticed that the 14 days from that firing of the signal right here, which is the volatility entering the 90 percentile, 14 days happens to land. You can see the dates right down here, you guys. So you can see down there that is on the November 16th is when this play could essentially realize. The 16th would be right after midterms. So that it's very curious that it would do that, you guys. So for the new listeners, this is volatility we're looking at, represented by this indicator BBWP. Volatility is direction neutral. We pair it with a momentum oscillator, similarly to this one right here. This is stochastic momentum. It's similar to an RSI, and this gives us the bias and direction. In my experience, this gives me about a 75 to 85% accuracy depending on the ticker, and it's not perfect, but the 80% on average is not bad, and it's good enough to consider, right, you guys? So we are now officially starting this contraction phase from critical expansion levels, you guys, which is anything above the 90 percentile for me to consider. Now, I've taken every iteration from where we have started a contraction phase from the critical expansion phase. I've taken the metrics of the duration of the iteration, the upside thrust based on the iteration, and also the amount of times that the volatility versus momentum profile have guessed the upside correctly, which is why you see green and red lines, you guys. So that gave us a metric for us to look at. Out of a total 21 iterations, we're looking at 12 that have been guessed to the upside, and that gives us an average upside accuracy of 57.14% with an average upside thrust of 172.12% over the span of about just over 13 and a half days, or just under 14 days. So those 14 days that we're talking about are just so happens to be landing right after the midterms, like we said, you guys. So now for the new listeners, one more time, applying the 172% metric to the upside, you guys, from the firing of the signal, which would be right about here, you can see that it shares confluence with the resistance of our ascending channel. And we would actually now, since price action has actually moved to the downside, the 200-day simple moving average is now below the target, which it could be a very good thing, since we could clear it and then use the 200-day as a form of support. So I can go ahead and now again draw a type of implied path for that 200-day moving average, you guys. So we're going to follow up with this as it goes, and it's potentially going to be following this type of trend right here, you guys. So we'll go ahead and make it, well, actually, you know what, we'll leave it at this color. So yeah, we can clear up to the 172% and then use this area as a form of support, eventually failing it and using this as a form of resistance, and then continuing on to the bottom for take profit at D. So the ABCD strategy is a very common strategy used by pros and institutions, day traders, scalp, momentum, swing traders. All of them do this, you guys. So this is where long positions open up at X, short positions open up at A, while longs take their profits, and short positions take profit at B, while longs open their profit, and thus far, et cetera, right? It continues like that, you guys. So let's go ahead and now move on to our RSI profile like we did earlier. But now let's see what we have for the immediate short-term time frame, 30-minute. We are looking at some potentially bearish price action, which could be in accordance with us testing one more time this the 2 fib at 26.54. You guys, I mean, there's also the potential that where we can test this wick low from yesterday, which is about 25.23. Now, since I said that I'm not a financial advisor, guys, just remember that my stop is set at 24 for 65% the account, and then my final stop is actually right about the 22 area for a complete liquidation of my position, you guys. I am not willing to go below the 22-cent level to find out what's, where we can go from there. So in other words, we would essentially be facing price discovery to the downside if we were to fail the 2.618 fib at 20.99 or 21 cents. This is a very important area, you guys. So it is also a high demand zone, so there is a potential of having a huge bounce from here, but I'd rather just lose my position right around this area right here, you guys, and then see for a better entry right down here. That doesn't mean that the play is over. It just means that we are facing economic issues that can likely present a better entry for us. We'll revise the play once again, you guys. It's just who's going to be able to tell that BTC was going to sell off and FTX was going to go into a liquidity crisis, like we can only see so far into the future, you guys. So let's get that RSI profile once and for all. So new listeners, we have this is a regular RSI setup. The upper half is the bullish control zone. This is the bearish control zone. Bottom half, the inner workings, is the weakness percentile of either, and the outer zones is the strength percentile of either. So we have the bull strength and bear strength percentile right at the outer zones. So we are now primed for entry on the 30-minute immediate short-term time frame into the bear strength percentile, you guys, and we might be getting a little bit of a hint since the pivot is not so strong to the downside, and the moving average is starting to change its pivot or change its curvature, leaning more towards the upside. So let's go ahead and move on to the bi-hourly. Actually, let's see. Okay, bi-hourly is in the shallow areas of the bear strength percentile, you guys. So there is the possibility that we can be gravitated back into the bear weakness percentile. However, we have made a bearish cross. We are now trading below the moving average. So this is the moving average, and we're trading now. The signal line of the RSI is now below the moving average, which is bearish. Now you do see that the pivot is facing straight to the right. So that's actually not giving us too much of a bias in direction, other than the fact that we are within this shallow zone and we can potentially be trading within this line of fire sideways for some time, you guys, which is very, very much reminiscent to what's going to be happening with the economic release, the economic metrics being released, like the CPI and stuff. Okay, so now let's look at a higher term time frame. Let's go to the 6 hour, actually. 6 hour RSI is also doing this sideways nonsense, you guys. Let's just jump up a little more into the 8 hour. 8 hour is suggesting a continuation onto the downside. However, it's still within that shallow area of the bear strength percentile, you guys. This is all, and it's also getting dangerously close. For the first time in a long time, we're getting dangerously close to attempting a bullish move above the moving average, you guys. So we have to keep that into consideration now. Now the daily. Let's go ahead and look at the daily. That's right. So the daily RSI, we are looking at a continuation to the downside. However, you saw yesterday that we did enter this, and our pivot was starting to move towards the upside. We're starting to find that rejection from the border of the bear weakness to the bear strength percentile. So this is likely to face some sideways trading as well, you guys. This is indecision at its max, and it's very much telling us that the psychology of the trade is indecisive about what we're doing, you guys. So our long positions are going to have to maintain as is, you guys. So we still have not recovered for a long position within here, but you can see that the ARC Armor, which is in partnership with Crypstex Trading, this is an indicator that's comprised of several exponential moving averages put close to each other so they can be algorithmically placed within a chart to give us a wave of direction with also, if you will, buy and sell signals. So we have long and short signals. As you can see right here, it said long, it went up. We have short, it went all the way down. We have a long position, we have a huge candle to the upside, short position down, and you can see right here that we have not recovered, and it gave us a short signal right up here, you guys, when we were trading today. This is the 30-minute chart. So these are actually made for scalpers, day traders, momentum type strategies, you guys. So you can see that now right down here we're starting to print some of those green bars, but we're also seeing that the curvature is starting to change its momentum of direction. So we can potentially see a long signal triggered maybe after the morning session tomorrow, you guys, possibly by mid session. We definitely need to have BTC resolve what it's doing, and whatever other assets you guys are pressuring the entire market space down, because I did mention Tesla as well, you guys. Tesla is large enough. It's a mega cap. So mega cap companies have the power, or large caps as well, they have the power to move the markets, you guys. Okay, so this is some of the pressure that we're looking at, but our play is still it's on a thread right now, but it's still alive. And it's definitely still within the bounds of our metrics, you guys. So with that said, I think this is a pretty good place for me to leave off the video, guys. If you have any questions or concerns, please don't hesitate to reach out to me on Discord, on Twitter. I'll leave the links in the description below for you to consider joining the trading community, ARCa on Discord, you guys. But with that said, I wish you well, and I will catch you at the bell mañana. Adios.